Stocks sold off this week and investors panicked that potentially the AI spending that we're seeing is not sustainable. But smart investors are reading between the lines and understanding the trends that are happening. And it's pulling back several of the companies that we cover on today's show deep into buying zones. Tesla confirming the $1 trillion pay package for none other than Elon Musk. What did he say during the company's shareholder event, which is not getting a lot of attention on this wonderful Friday afternoon? We'll discuss that. And folks, we are 12 days away from Nvidia reporting their earnings. Shares were down 9.5% this week. Where are shares setting up heading into earnings? We'll discuss that and more on today's video. And back by popular request, this video is ad-free. We are not posting these for the algorithms. We are not posting these to make money. We are posting these videos so we can all get better at investing and hopefully make some money along the way. We'll kick things off with Meta Platforms. Start of the week at 654, down by about 5%. My gosh, you got to look at this one technically. If you stick around for the technicals, at least stick around for Meta as it closed the week at 621.69. This comes as the company is confirming its $600 billion of CapEx to build AI infrastructure here in the United States. This confirms a, quote, whisper number that was said during a presidential event back in September, where on a hot mic, CEO Mark Zuckerberg made some comments about this $600 billion mark. Now, if you want to make some money, I think there's some pair trades, if you will, with this. Meta's obviously deep into a buying zone. That goes without saying. If you pull up the technicals and you see this type of move on a stock this big, it often means it's in a buying zone. Now, the other thing that we know about Meta is they partner with very specific companies on a number of these different projects. In fact, they favor some companies, which often is their number one customer is Meta. One of those customers we tossed to subscribers over at Equity Empire, and I thought about it later. It's like, wow, we've got the massive pair trade. We're leveraged to Meta, but I think if you look at the core business over at Meta, we are going to look back in 3 to 6 months and believe this was a Google-like moment where earlier this year, Google was underperforming the MAG7, and now it's basically at all-time highs. Moving on to Apple. Start of the week at 267. This one basically hanging out essentially at all-time highs, which are 277. This one closed at 268 and some change. This comes as the company is planning to partner with Google to bring the company AI to Siri. The deal is worth roughly $1 billion a year, which is pocket change to both companies, which tells me that there is more to this deal than just the money exchanging hands. Obviously, Google gets their technology onto one of the largest, or maybe the largest platform devices in the world on top of their Android devices as well. It certainly cements Google as one of the leaders as it relates to kind of voice or speech to text AI. The other thing that it does is likely opens up huge monetization and other type of ad opportunities for Google, as they are going to be able to leverage the Apple customer, combine that with the Android customer, and create a massive ecosystem of monetization around these voice assistants on the phone. That is why I believe the token $1 billion per year, which is probably about what it might cost in today's age to handle the queries through the data center, is put up so both companies essentially break even on this until the monetization and the features come, which brings in the big dollars. Now, Apple is actively testing a production for a low-cost MacBook. According to this press release, it should be priced as low as $700. However, if you go to Amazon.com, I understand this is the 2025 MacBook Air with an M4 chip. This is, I believe, maybe the previous version, as they have an M5 chip out as well. This is also the MacBook Air, which I just happen to have one sitting next to me as well. This one's already priced at $750. So there's already a MacBook priced in the $700 range. I don't think this moves the needle for Apple unless they can push significantly under a $700 laptop. And I say that because somebody buying a $700 laptop is not necessarily buying it for the features. It's more because of the price. The iPhone 17 is continuing to see larger than average lead times. This includes myself. If I've ordered one of these phones 2 or 3 weeks ago and there's been no movement over at Apple. They confirmed this on their conference call a week or two ago, and they also guided for huge fourth quarter sales. That's probably why shares of Apple continue to stay at elevated levels. Their TV boss, Eddie Q, squashes the idea of an ad-supported plan, which is the trend we're seeing among streamers to offer maybe a more affordable plan for people that are willing to sit through advertisements versus paying the fee that the company charges. Currently, Apple's charging $12.99 per month or $99 per year. I believe the service started and launched at a $5 price point. This company is continuing to try to figure out how to monetize this. I will remind you that Netflix said for many, many years that they would not do an ad-supported plan, and now it's critical to the company's financials. Moving on to Amazon. Start of the week at $255. This one, like a lot of stocks, drifted lower, and then on Friday, when all the short sellers went home because they had massive profits bagged for the week, Amazon finished the week down 4.5% to $244.41. This comes as the company announced, like every other company in the AI space, a deal with OpenAI for $38 billion. For hundreds and thousands, this specifically referencing Nvidia GPUs. Now, the key here with Amazon is, like, look, this $38 billion, whether it gets fulfilled or not for Amazon, not necessarily a big deal. They're essentially allocating their supply of Nvidia GPUs over to OpenAI because OpenAI is willing to kind of reserve them and get them in the door. Where this becomes a bigger deal with Amazon is if it can start to cross-sell its own homegrown chips that it's leasing out to Anthropic. That would be more interesting. And obviously, if OpenAI inks partnerships with Amazon on the shopping side, like they have with Shopify and Etsy, that is what I am waiting for. And potentially deals like this open up communications between the two companies and offer more upside to Amazon. Now, Anthropic, a company that obviously Amazon has a large investment in, is forecasting $70 billion in revenue and $17 billion of operating cash flow. This will be not till 2028, but this seems believable based on everything that we're seeing underneath the surface, that the massive use case for AI at the enterprise level is for customer service support, code generation, and cost cutting, not necessarily replacing a bunch of human labor at the current time, augmenting it to a certain degree. And in some cases, particularly at the white collar level, you are seeing some elimination of some roles. I've said it time and time again, AI is a great money saver, and the money that used to go into human capital is now going to flow into compute capital. And that money is not going to all of a sudden reverse. So these people calling for a bubble or a crash, they are going to have a rude awakening when they realize that the cash flow that is flowing into AI is not only sustainable, but it's durable because it used to go to humans and now it's going to the computer. Amazon is demanding Perplexity a cease and desist on its AI agent comment. The third-party application would log into Amazon and buy stuff, which Amazon says is both illegal and unethical because it's not disclosing its activity to its users. I think if something showed up at my door based on some kind of AI agent, I probably would want to know that. There's probably more to this story that is bubbling under the surface. I can imagine Amazon wants AI agents to be buying stuff 24 hours a day on Amazon. They probably just want it to be done a certain way. Cipher mining. Anybody that's an Equity Empire subscriber is probably fondly aware of Cipher mining, as that stock jumped to a 15-year high, jumped on a 15-year lease pack. This is with AWS. That is a $5.5 billion lease agreement with Amazon Web Services. Cipher is one of these neoclouds, very similar to Nebulas and others, that is finding that the hyperscalers like AWS are so backed up with business, they actually have to go down the stack. Moving on to Netflix. Start of the week at $11.20, and this is encouraging price action if you're looking for Netflix to bottom as it heads into a 10-for-1 stock split at some point. And shares closed the week at $11.03, down 1.5%. This comes as companies in talks with iHeartMedia, which controls many video podcasts. We saw this a couple of weeks ago with Netflix partnering with Spotify, I believe, on other types of content. Netflix shifting into what I would call kind of user-generated or professional, we'll use the term professional podcast, that have deals with these larger distribution platforms like Spotify and iHeartMedia. I think this is a big growth driver for Netflix going forward. They don't necessarily have to play like the full-on user-generated game that YouTube plays, but I believe going forward with Netflix, they're going to have a much wider variety of content, and many or much of that content is not going to come from traditional movie studios or TV studios. It's obviously going to be a mix of live sports, but also podcasts and kind of what is referred to as talking head content, kind of like this. If Netflix wants to reach out and do a deal, you know where to find me. Moving on to Nvidia, start of the week at 207. And I tell you what, I saw people panicking about the price action of stocks, and I was just sitting back and I was like, wow, you can tell who doesn't have a plan, who doesn't have the levels planned out, where they're buying, where they're selling. If you have that all planned out in advance, a week like this week wasn't stressful at all. But you can imagine if Nvidia was down 9.5%, a lot of the trash that is being pumped on this platform and X and other places probably was down a heck of a lot more. This comes as Jensen Huang initially said China will win the AI race, and then the company had to come out with a clarifying statement as somebody told Jensen Huang that might not be a good idea to say that, and he backtracked saying China will certainly compete with the United States and that they are nanoseconds behind the country. This comes as the Chinese government is banning the use of foreign AI chips like Nvidia in state-funded data centers. Is there anything other than state-funded data centers in China? That is kind of a rhetorical question. But here's the deal, and here's something that I've always said, and those of you that pay close attention to what I'm saying, it's probably like 5 of you, but maybe more of you will pay attention now, is that China was always going to have its own AI. And AI, as we're coming to understand it more fully, and the maturity part of AI is owning the technology stack, the hardware behind it, and the data center behind it. China's playing the long game here, but they have their own e-commerce. They have their own coffee shops. They have their own electric vehicle brands. They have their own cell phone brands. The country was always going to have its own large language models, and I think it only makes sense for a government that tends to have a little bit longer focus and obviously is slightly more privatized than maybe here in the United States to a certain degree, that they were always going to try to control the hardware stack as well. Now, they would love to export that to other countries, but I think that's going to be a little bit harder in this case, as obviously you have supply and demand constraints on the manufacturing of the chips, but also the technical expertise from like a Taiwan Semiconductor and a design perspective like Nvidia. I don't think this is priced in or wasn't priced into Nvidia stock very much. So you only have upside if somehow China reverses this policy or the two countries come to some type of different agreement. I don't think this negatively impacts Nvidia too much, as America is always going to want to buy its semiconductors and its AI from Nvidia, an American company, just like we shop on American e-commerce sites, and China was always going to want to do it on Chinese state-backed ones. The back and forth between the two companies as it relates to selling dumbed down or scaled down AI chips to China always seems to change, but I would just assume going forward in any type of revenue estimate or any type of forward estimate with Nvidia that the number on China is going to be 0. It's never going to be greater than that. It likely means more competition to a certain degree in some markets, and in some use cases, China will have some competitive advantages there. But for the most part, Nvidia will supply chips to the United States and other parts of the Western world, and China is going to be on an island, but a big one at that. This comes as the company is signing a $2 billion memorandum of understanding with Kazakhstan for its advanced chips. You always got to wonder when these governments sign these like $2 billion deals, and I'm not familiar with Kazakhstan's financials, and quite frankly, I don't know if I could point to it on a globe, but you always wonder when these governments sign these large contracts, like would they just print the $2 billion and give it to Nvidia? But either way, Nvidia will take it. And look, $2 billion to Nvidia, especially if it comes in within like a given year, it's not going to move the EPS much, but it actually is decent. Now, Nebuous is going to bring its AI-powered cloud backed by Nvidia to the United Kingdom. Nebuous has some competitive advantages outside of the United States. In the United States, they're another neo cloud along with kind of the leader CoreWeave among maybe a half dozen other ones, a couple of them public here in the United States, but internationally, they actually probably have a little bit more competitive advantage, given that I believe it's kind of a Netherlands-backed company, and that's one company on deeper pullbacks. Could be exciting. Moving on to something exciting, and that is Google. Start of the week at 281, essentially at all-time highs at 291, and it's holding those levels just like Apple. And the point I was making with Meta is early this year, shares of Google were $160 back in April, and here we are about 6 or 7 months later, and shares closed the week closer to $280. This company announces their 7th generation TPU, which is a fancy term for GPU, or high-end data center high-performance computing machine. It's called Ironwood. This is in partnership with Broadcom, and that is set to launch in the coming weeks. In the past, before there was a lot of attention around this, Google would announce these and say they were already in production and they were already running certain types of systems, whether it was YouTube's or Google Maps. Now, with so much attention being played to these, you often kind of get the buildup and the ramp, but the buildup and the ramp for these has been long in the running. What is different this time around is Google is finding external customers. So like Anthropic, I believe, signed a deal a week or two ago to access these TPUs. Other customers out there, when they sign up for Google Cloud, you have your choice, if it's available, which type of platform you want to run on, whether it's an AMD system or Nvidia, obviously the preferred system. But more and more people are tailoring workloads to the TPU, in part because of some cost advantages. Now, this comes as Apple is nearing that deal with Google to bring next generation AI to Siri. We talked about this in the Apple segment, and I just want to emphasize a point that Google is going to be able to develop the monetization strategy for your voice to text or your voice application on your cell phone, whether it's a Google phone or an Apple phone. They are going to be able to have almost an exclusive right to monetize that. The $1 billion token year payment from Apple is a rounding error on both companies' financials. And so it's really that upside. Can you come up with ways to monetize it? And it'll be interesting to see what ways Google comes up with. I'm sure they got a bunch that they've got in the works. This comes as the company is investing Gemini, which is their code word for AI, into the Maps product. Be interested to see how that changes things. You're going to be able to check for available EV chargers along with proactive traffic updates. Could be that this is something that's integrated tightly more into automobile makers as well. But what this also means is the demand for compute will just continue to go higher and higher as companies like Google layer them onto their existing technology and obviously come up with new use cases all the time. This comes as the DOJ is not nearly as strict as previous ones that we've seen with business combinations. Google is cleared to buy a cloud security company called Wiz, which it agreed to buy for $32 billion not too long ago. There were some worries that this would trigger an antitrust review, but given that Google is a search engine with an advertising business and a media business, buying cybersecurity to shore up some of the security within its own applications, probably not something the DOJ should be too worried about. This comes as Waymo is going to launch 3 new markets for its robo-taxis starting next year. Company's autonomous vehicles are set to launch in San Diego, the great Las Vegas, Nevada, and the beautiful Detroit, Michigan. Can't say that with a straight face. Hopefully, as these cars start to expand to more markets, I'll get less comments in my comment section saying that robo-taxis and autonomous vehicles is still 5 or 6 years away. Believe it or not, I still get comments like that every single week. And I understand not everybody watching this video is adjacent or next to a major city, but if you fly into San Francisco, and I'm talking about San Francisco proper, although I was in kind of what's referred to as South Bay or San Jose, San Mateo, which is outside of the proper city of San Francisco, and I saw Waymos. If you are in the city of San Francisco, you sometimes see more Waymos at a stoplight than actual cars. When you're down in Los Angeles, you see them. In the major cities, this is going to become one of the dominant modes of transportation. it is hard to find parking. It's expensive to find parking. In some cases, most people will actually rely on this as their exclusive mode of transportation because, like I said, finding an apartment with a parking spot, let alone one that is not hundreds or even $1,000 or more per month, is actually pretty difficult in a lot of these cities. This is going to become a gigantic business, not just for Google, but for Tesla and probably a handful of other companies as well. Moving on to Microsoft. Start of the week at 521. This one drifting lower. You want to see this one technically as well as we're approaching some interesting areas on Microsoft as it closed down nearly 5% this week. OpenAI says it has over 1 million business customers globally. The company is clearly dominating the consumer side, the consumer AI. In fact, OpenAI or ChatGPT has more or less come a verb like Google or maybe like Kleenex. Anthropic has made some bigger headways as it relates to global business customers, but this is where a lot of the big money is going to be made, and quite frankly, a lot of the sneaky money is going to be made. Speaking of money, OpenAI's CEO says they're doing well more than $13 billion in revenue, and they hint at a $100 billion type mark when it comes to revenue. Here's what I'll say about OpenAI and revenue. This is the pattern that you see with these apps. I remember when Meta went public, this was many, many years ago, it was an under-monetized asset. In fact, when Meta went public, they weren't even showing ads to their mobile phone application. So when you downloaded Facebook, you actually didn't get served any ads. And there were questions about the company's ability to monetize that. And that was the bear case argument for Meta. Think about this, guys. Meta now makes more money in a day on mobile ads than virtually any other ad company in the world. I'll say that again. Meta makes more money in a day on mobile ads than basically every other ad company combined does, let alone what Google does on mobile. And when these companies launched and went public, and the same thing was true for Google, everybody was worried about them monetizing on mobile. Now, all these stupid super geeks are trying to worry about OpenAI monetizing their web app. I am telling you right now, OpenAI could easily have $100 billion a year in revenue just based on the users that it has now. If it wanted to monetize its app, if it wanted to build in features and shopping features and ads and banners and do all that type of stuff, it could do that. It could also raise the price. Any of you out there that are heavy users on OpenAI, if the price of AI went up, you wouldn't cancel. You would gladly pay more. I pay $20 a month for Anthropic. If they raise the price to $200 per month, I would still pay that. It is that valuable. You're also looking down the stack at these companies that are replacing HR, replacing customer service, replacing IT, replacing different types of R&D and coding staff. They would also pay more for this. This is the early days. This is like a baby. We haven't even gotten to grade school in terms of monetization with OpenAI. Now, I understand a lot of the people on YouTube, a lot of people on social media, their job is to regurgitate some of the stuff that they've heard on CNBC or other places, or the AI in the back end is telling them to do a video on circular financing and how bubbles work and all this type of stuff. Trust me, half of the content that you're seeing on YouTube about OpenAI and stock investing in general is scripted and written for the creator on the back end of the YouTube studio. They tell you what to say. They tell you what the hook is. This is all inside YouTube studio. And when I'm perusing through YouTube, I see numerous creators that are doing this, and they're creating the content for the algorithm. They're creating the content for the ad money. They're not creating the content using a brain cell. If you use a brain cell and you apply what we've learned through the internet in the past and the history of monetization, that it takes time. But as you have users and you have scale and you provide value, that scale and that revenue and the profits come pouring in. OpenAI is easily easily going to be able to do $100 billion, $200 billion, $300 billion in revenue. Very similar to what we see at Meta. Monetizing this asset is not going to be the hard part. The hard part is going to be able to line up the compute assets so you can continue to stack on features onto OpenAI. So the upside is $1 trillion in revenue rather than the upside being what Meta does. Now, Microsoft Azure is hitting 1.1 million tokens a second. That is an AI inference record. This also goes to the fact that I see a lot of videos and a lot of comments, people talking about AI, and I'm not talking about my videos or this audience. I'm just saying this is exciting for me as an investor as I'm surfing through social media, as I'm searching through different types of comment sections and trying to read the temperature. There's still a large segment of investor that doesn't believe in AI, thinks nobody's using it, think it's only slop AI content and slop AI videos. That's not the case. A lot of this is saving businesses money. A lot of it is making businesses a lot of money. A lot of this is making employees and people like myself far more efficient than we would have without it. And we're never, ever, ever going back to the old ways of doing things. Moving on to Tesla. Start of the week at 463, and they handed out $1 trillion to Elon Musk and saw the shares decline 7%. Finished the week at nearly, we'll just call that $420 trillion man. Elon Musk won a historic pay vote. He got enough shareholders to vote that he could have a pay package worth $1 trillion. Now, I do believe that he must achieve $400 billion in profit for Tesla, and the company must achieve a market cap of $8.5 trillion. That is nearly 8 times the current price of the company today. This is another thing that you have to be careful of. I saw a lot of politicians saying, well, Elon Musk is getting this $1 trillion pay package. Understand that politicians is a game of attention. Politicians want to play into the fact that you need them, that you don't make $1 trillion, so you need the politician out there fighting for you. Just understand, the person that has more than a single brain cell can look at a company with $1.5 trillion and say, for this man to achieve this pay package, the stock would basically have to go up by 8-fold. Of the goals that he has to achieve, 10 million active full self-driving subscriptions. I don't think that's going to be a hard one. 20 million Tesla vehicles delivered. That's going to be difficult if we're not talking about robo-taxis, and putting 1 million robo-taxis into service. I think that's going to be an easy one. 1 million humanoid robots within the next decade. I don't think that'll be hard except from a manufacturing standpoint. Now, one way you get a bunch of the full self-driving out of the way is you get full self-driving approved in China by early 2026. The company constantly say, hey, we eye this and we think this is possible. Whether or not they get the approval to this, who knows? What I will tell you is the only thing holding back full self-driving is the government. I've used the full self-driving software enough on my Teslas, and I've been skeptical of it in the past. It hasn't worked as well as it has, but they continue to make updates, and I will tell you, it is as good as I've ever seen it. It's not perfect. If you're in a weird situation, there's a lot of edge cases that actually come up quite a bit. Do I want to be stuck in the back and you've got someone hand waving you into a different lane and move around that? No, the Tesla doesn't handle that very well, but no full self-driving system does. But basic A to B type driving, it's pretty much solved that. And if they can get these edge cases, which I actually think will be difficult, well, you've got a system that works. Now, company had their shareholder meeting. This was yesterday. Nice summary from Sawyer here on the X platform. You have cyber production starting in April of 2026. The Cyber Cab is this 2-seat type vehicle, which is exclusively for the robotaxi market. This is a car with no steering wheel, no pedal, no brakes. It also doesn't ride as well, and so theoretically it should be a lot cheaper. Also, what they showed off here, which I don't think they really highlighted here, is a lot of the parts on this Cyber Cab I thought was interesting. It actually goes right into the robot as well. So the Optimus robot borrows a lot of the features of the Cyber Cab, whether it's the batteries or different types of moving parts. those two apply, and I think that's some synergies that obviously is intelligent on Tesla's part. They released a new semi-truck design. This is interesting in the fact that this could really boost Tesla's revenue, as these cars or these semi-trucks I think probably cost $250,000, $300,000, and you get these large corporations like PepsiCo. They've already tested him here in Northern California where I live. There's a lot of them on the road. In fact, you see them all the time. You get larger corporations and even independent truck owners buying and leasing these. That would really juice Tesla's revenues. You've got the robo-taxi service rolling out in Miami, Dallas, Phoenix, and Las Vegas. This is what we're seeing with Waymo in pretty much every major city. I would think probably within 5 years, you are going to go to these cities and the robo-taxi fleet will be undeniable. It will be very similar to how Uber took over. I don't know if a lot of you remember it. You have to be almost my age. You went to Las Vegas before the existence of Uber, and yellow cabs were everywhere. Same thing in New York City. Now that existence is less, and it's obviously been taken over by Uber. The same transition is about to happen, not necessarily globally, but in these large metropolitan areas, the Uber transport is going to be taken over now by the robo-taxi. It's already happening in San Francisco. And considering you have Google with a bunch of money behind this, and Tesla certainly can fund this as well. And on top of that, they probably have better price economics behind this cybercab, which they introduced. Well, this is a company that is well positioned to enter those markets. They talked about their semiconductor chips, which Elon Musk said that they might build their own chip fabricating facility. This was Elon Musk telling what I believe is a tall tale. What was interesting is if you go into my feed, I posted a short form video. I think it was early this morning. Tesla name dropped Intel at their shareholder meeting. Intel and Tesla do not have a formal partnership. Anytime you have a CEO name drop another company during a shareholder meeting, when the two don't have a formal partnership, it means there's been a lot of discussions between the two companies. And if Intel can get its act together from a fab facility perspective, well, they're going to have Tesla as a major customer. In fact, a lot of the information that I've gotten is that these two companies are likely headed towards a partnership, and we'll see what that looks for going forward. That's obviously great for Intel. They showed off their lithium refinery. They've got this Roadster, which they've been teasing for a long time. I don't believe the production targets. They say 12 to 18 months. It's probably closer to the 36 months. You are likely to get full self-driving regulatory approval in Europe in Q1. I'll believe that when that happens. Optimus production line. They gave us a sneak peek of that. That was all manual labor. They're going to have to figure out how to make Optimus build itself. That's certainly something that Elon Musk could come up with, but unless he does that, there's no way they're making those at scale based on the production video that I saw. And then they showed the full self-driving crash data, 85% less crashes, 35,000 less fatalities, 2 million less injuries. I believe all of these numbers. The only one that don't believe these numbers can't afford a Tesla, can't afford the $99 a month for it, and can't afford to spend a couple of hours in the full self-driving. It is exponentially safer than probably 95% of the drivers, and the other 5% are probably NASCAR or professional drivers. Now, Tesla's EV sales in China dropped by about 10% in October. This is not that bad considering the other numbers that we've been seeing out of Europe. Company is obviously facing very massive increased competition in the region. The key thing with Tesla is just hold the vehicle sales as profitable as they possibly can. Continue to keep the units as high as they possibly can. Do some brand building. And that's what this next story relates to, I believe, is they set to hire an ex-Lamborghini head to drive sales in India. I like this because if we think about branding in cars, Lamborghini is not running ads during like Monday Night Football. They're not doing paid performance marketing advertising on like Meta or Google. But Lamborghini, obviously we think about Lamborghini and we get a clear image of what that is. We can even think of the guy or the girl that would buy a Lambo. Lambo has a status and a brand to it. Now, it's going to be more difficult with Tesla, but there is a brand and a status behind owning a Tesla. If Lamborghini can start to shape that in the heads of India buyers, well, they can certainly apply that to the United States. They can apply that to other regions. And the more you remove Elon Musk and his politics from these things, whether you agree with them or not, you probably agree that they've impacted the sales or the brand image of Tesla. You can remove that. You can extrapolate that. It's not easy. It's not going to apply to everyone across the board equally, but it is something that is possible. And the fact that they're tapping industry experts from elite level car brands shows me that Tesla's thinking about this in the right way. And we'll see if they're able to execute. Moving over to the technical segment of the show. Everybody was panicking this week, and hopefully you watching, you were not panicking, because if you have a plan and a process, moves that the S&P 500 have made this week was not at all surprising. You literally confirmed a new higher high, an all-time high on the S&P 500. Goes without saying, when a stock or an index makes an all-time high, it almost always pulls back. How deep the pullback is always varies on news flow and those types of things. The fact that the S&P 500 didn't even pull back to the 200-day moving average, and I saw people panicking, just showed you how many investors out there are over-leveraged to crap stocks, over-leveraged in their own individual account, and not only that, have no sense of planning, whether it's having stop loss levels, having levels where you come in and re-entry. Everybody's panicking and running around with their head cut off, whereas if you have a plan and you look at the charts and you say, okay, if the S&P 500 were to pull back to 63.33, that's the area where I'm going to dip by. Currently, the S&P 500 is at 67.28. We got another 400 points to go before this one really even gets down to a level where you're even thinking about dip buying it to a major degree. Now, I wouldn't have blamed anyone for stepping in and adding to a couple of positions, but this was a garden variety breather from a market that has been on absolute fire. Now, Meta Platforms has done more than what I would call a breather. That is because back in August, shares were at $790, and now we're at a number closer to $600. That is a massive sell-off on a stock that has said time and time again that the demand around their AI spending is far exceeding their ability to deliver it, and that just goes on the core Meta Platforms app. We are going to look back on this company just like we look back on Google here in a second and say, wow, these prices that the shares trade at was absolutely insane. You are also underneath the 200-day moving average. If we stretch out with Meta over the past several years, yes, there was this massive drop, which has a lot of scar tissue as it relates to that, but this is a different story. Those of you that remember my content back in these days, in fact, the videos are still here on the channel. When Meta broke through this key area at 250, that was your time to sell. It also was a signal that the company was going to pour money into the metaverse, something that had no demand, no revenue, and no future outlook. This time, it's different. AI has revenue. AI has a product. AI has a use case on Meta. In fact, billions of people are using it on a daily basis, whether they know it or not. It applies to the advertising business as well. I understand that I'm speaking to the choir a little bit, but I want you to understand how clear this thesis is and how great of an opportunity this is. This stock rarely trades under the 200-day moving average. It rarely trades under it for an extended period of time. And here you are with Meta. Moving on to Apple, completely different situation. This stock was underneath the 200-day moving average. There were doubts about this company's ability to ship a working version of Siri or monetize AI. And here we are. Those worries have been not quelched at all. There has been no solution to Siri. There has been no solution about monetizing AI. And here you are at the top. This is an absolutely phenomenal chart with Apple. It looks beautiful. These are areas where if you want to take profits, you can set some stop losses. The first area of support is at 250. I'd want to be just underneath that if I were to set a stop loss at those levels. Amazon has just broken through to an all-time high, has pulled back and done a back test of the previous highs. Look at this technical pattern. I do not move these lines around. We had a line at the all-time highs with Amazon. And what often happens is you break to these highs. And this is, I feel like a broken record. I say this all the time. You break to the highs and then you come back and do a back test. That was a great buying opportunity. You still have an opportunity here with Amazon. And it's a low risk one if you want to set it up that way. If you don't like to see your account go down like these teenagers with Robinhood accounts, don't worry. Set your stop here at maybe about 230. There's a gap in the chart. Wouldn't be surprised if that fills. I'd want to be just underneath that. You can buy the shares at 244, risk $14 to the downside. That this is the start of a new uptrend where the upside, at least in the shorter term, is back into the 260s, maybe even high as $300, $400 in the long term. The fact the stock might not get lower than this high at 237. Things are looking great technically for Amazon. Now, not so great with Netflix. This one's actually broken out of one of its long-term trends, but this is slightly different than, let's say, let me bring you up a chart of Nike. Let me show you a break of trend. We've got to switch this to a 1 month view. Here's the Nike trend that I had watched for the last 20 years of my life. In fact, the last 25 years of my life, Nike would get to the bottom of the trend and we would buy it. Well, finally, unfortunately for Nike, it finally broke through what was a 40-year uptrend. And with Nike specifically, I don't want to spend too much time on this. You're looking for a break up into the highs. It's tried to do that over the past couple of weeks, hasn't been able to do that despite me spending endless amounts of money at the company's website. With Netflix, it's a different story. The long-term trend with Netflix is still very much intact. The long-term channel is looking absolutely phenomenal. In fact, we are close to the top of the channel. The channel lines that I've had drawn on, and you've looked at it on this channel for the last several years, is what I would call kind of an intermediate trend. And so when these trends break, it's not that alarming. It's not as alarming as Nike or maybe even Chipotle's chart. When you break through here, it doesn't necessarily mean the good times are over. What often happens is you have a flattening of trend. That instead of this breakneck 45-degree trend that we've been on with Netflix, you flatten out to a 30-degree trend. And then I want to remind you that if you flip back out to a monthly view, this is why you always want to kind of play with your time frames with these stocks when we pull out. That's still the long-term chart with Netflix. And so, yeah, you could have a deeper pullback on this one. In fact, it would coincide with this 200 monthly moving average. You could have a very healthy pullback on this one, and it would still be on trend. That's why if you got into Netflix, pick some levels where you get stopped out of this one if you don't want to see the shares continuing to go down. The other thing you can do if you step in and buy like a Meta or a Netflix and you don't want to have downside protection of a stop loss, well, the other way to protect yourself a little bit so you're not waking up every morning and logging in and checking the share price of either one of these companies is you stagger your buys. Figure out how many shares of Netflix that you want. The easier way to do that is I do a dollar amount. So with Netflix, it would be maybe about $10,000 based on my size of how much I would want to buy. And also I want to keep it in relation to the rest of these companies. With Nvidia, it's a 6-figure type investment. And so with Netflix, I'd want to be at most 10% of what I consider kind of for my own personal portfolio, a 6-figure type investment. For Netflix, I'd want maybe 10 shares. And so I'd buy 1 to 2 shares at a time at these levels. Maybe I don't get to a full allocation, but I get enough exposure. And again, you're exposed to a very long-term trend that I believe is just in the midst of flattening out. Moving on to Nvidia. This is really, really good. Let me clean up the chart here. This goes exactly what we said with Amazon. The all-time highs, and I'm going to change this to a beautiful Laker purple color. The all-time highs with Nvidia dating back to August was at 184. Previous, they were here at 150. We broke through the 150 level, established a new higher high, a cluster of them up here. To pull back from 211 back to 185 is completely normal. In fact, I believe we could come back and do a full back test to 150 and it wouldn't have a problem. Now, fundamentals, some things we could worry about. Yeah, maybe Nvidia announces those on the conference call in 12 days. I don't think that's the case. We've already heard from AMD. We've already heard from a plethora of other semiconductor stocks. The bottom line is demand is off the charts. One thing that I don't do is I don't step in on these companies 12 days before earnings. I have a general rule. I don't step in 1 month behind earnings. That is because even if Nvidia reports great earnings and they power to a new higher high, well, guess what? It gives us the confidence when it pulls back, and you see these stocks always pull back. When it pulls back, we can buy with even more confidence. Moving on to Google, this one's looking absolutely fantastic. Remember, guys, back in April and May and June, and everybody was worried about ChatGPT, and now everybody's worried about ChatGPT. Isn't it funny how things change so fast? The same guys that were telling you that ChatGPT was going to kill Google are now making content about how ChatGPT is going to kill the entire world because everybody is trying to rely on their investment. They were wrong about Google in May and June, and they'll be wrong about ChatGPT in 6 to 12 months. This stock looks absolutely fantastic. You're waiting for a breather there, and you're going to buy. Now, Microsoft's at a really cool level. We have blasted to the new higher highs. You should be very familiar with that technical pattern. Blasted to a new high on this one, pulled back twice to this 495 level. So you can have kind of a low risk buy if you want to at this level. You can step in and buy shares at 495. Now, this is interesting because it coincides with this 200-day moving average at this 475 level. I'm going to take off some lines here so you can just see this slightly more clearly. I'll come back to and add green boxes to these stocks once they start to flatten out and the trends become more clear. But we'll set up this trade for you if you're interested. Microsoft has tested this 495 level. So it's either going to hold or it's going to break. There's probably better ways to play this from an options perspective. And certainly if you're more sophisticated than I am at these types of things, you can set this up how you want. But I'm giving you the idea here that, look, this 495 level is held. And if it holds, we're likely to come back up here and at very least retest these highs at 530 and then likely retest these highs at 550. So you got $50 in upside here. I'd want to stop on this one probably just below the 200-day moving average. The other way you can set this up is literally like a $2 underneath your entry price. You can set it up that way, but because we have just a short distance below the 200-day, I'd expect if we broke through here, that would hold, could find some support there, and then move higher. So I would enter this one at 495 with a stop maybe in the 470 range. That would be a trade setup that I think, based on this formation and this pattern, that you could have with Microsoft. Now, moving over to Tesla. Similar situation as many of these stocks, essentially setting at these all-time highs. The all-time highs are at 480 for a stock that is 430. All intents and purposes, you're a stone's throw away from being at all-time highs. Two things you're waiting for with Tesla, and there's really no way to really know for certain right now. You're waiting for a break above the 490 level, and that's one area where you can trade this one if you want to. What you want to do is patiently wait until you get closer or at this kind of 480, 490, 491 level, and you can play the breakout, because we showed you the Google, the Amazon, the Nvidia. I mean, all these charts, even the Apple chart to a certain degree, has, once it gets to the highs, you have this breakout moment. In fact, I know some traders, this is like their go-to trade. They play the breakouts. And with Tesla being as followed and technically understood as this one is likely to have a big technical move off of the breakout. That's one way to play it. The other way is to play the breakdown. This one is also as equally likely, I believe, as breaking down for this level. You have the 200-day currently sitting at about 360-ish, and then further down, very, very clear support, probably down at 300 on this one. I know it seems like a long ways away, but as most of you know, this one has a wider gap in which it swings just based on the fundamentals, the valuation, and all those types of things. So Tesla's kind of in its own universe as it relates to pullbacks, but those are the two things I'm watching with Tesla. Folks, that was the FAANG Stock Recap Show for Friday, November 7th. I can't thank you enough for watching these videos. I think going forward, we're just going to make these ad-free. These are algorithm free. These are ad free. These are script free. There's all free with this video, because I'm hoping that these videos help inspire you, maybe give you some ideas from a trade perspective, give you the information that you need to confidently buy into these markets when they pull back. So when we have weeks like they are today and people are panicking because they're over leveraged, or they bought too much Duolingo stock, or they bought too many of these unprofitable nuclear and quantum stocks, this show can give you a good sense and a sense of calmness and confidence Because if you have calmness and confidence when everybody else around you is panicking, that is how you're going to set yourself apart as an investor. And the growth that I've seen in myself over the past 4 or 5 years is even when I'm making recommendations to clients which are paying me and I know are putting big money into the recommendations, I have a calmness around that because the plan and the process has been so well thought through and even verbalized here on the show well in advance. So when you have these pullbacks in these names, you confidently know what to do and you understand that yes, there will be a percentage of time where you make the recommendation, where you step in and buy on one of these stocks which held these long-term levels. And occasionally they do break through, and that is part of investing. Just like investing in your own small business, just like in investing in your own education or those types of things, occasionally you spend money on something and it doesn't work. But if you have a plan and a process, I promise you, things will get better, particularly as everyone else around you is panicking. I want to wish you a safe and fun weekend. I'll be back again in 7 days, but make sure if you haven't already, like and subscribe to the channel because I do have to put up some content on here for the Google algorithms and the AdSense money. My kids like to wear Nikes and I like to eat Wagyu steaks, so we might have to monetize. But the FAANG Stock Recap Show, I think going forward, going to be free of charge. Thanks for tuning in. Really appreciate all of you. We'll see you again soon.